Alrighty, so the blog for Thursday, 26th of July, day 34 of 65 of the Compound Effect Challenge, making forward progress every day, applying my edge and method. So it's a 13-week challenge or 3-month challenge, just applying some of the real foundations of what is a compound effect, and that's just on the little things day in, day out, just gaining momentum and just making it all happen. It's a gradual process, and at the end of the day, everything's achievable if you put your mind to it and just commit to applying to it every day. It's certainly not reserved for any sort of person with special talents or special gift or anything like that. It's just about the compound effect and just making that work for you, and that's just so evident in some of those books. Goals: stick to the method, apply the edge day in, day out, be doing the same thing, moving ahead at day 65. It's with absolute confidence, belief, results, information, spreadsheets, putting together a fantastic risk model to encompass all this. And the compound effect is certainly a major influencing factor. So it is a trading method. For myself, what I'm looking at is 6 very defined blueprints of areas that I recognise and have faith in, and then applying them. Well, not just have faith in, that's probably not the right word. It's just that they're based on probability and based on evidence of working over a longer term. And then applying those 6 areas. So something that really kind of changed my trading going back a bit over 6 months ago was something I heard was apply a method over the top of significant areas in the market. That's when you can have real confidence in your trading system. So it's about taking these 6 blueprints and applying them over the top of key areas. Now, key areas is either significant support and resistance area, or it might be an immediate price based on price action within the market, or it's an actual pivot. So these 3 strategies: the continuing trend is based on a key support and resistance area. The breaking the highs and lows, it's based on immediate price action and the momentum of the market, and that momentum involves the support of other markets. And then strategy 3 is a pivot, or a real pivotal point in the market where they're likely to change, and again, to get confirmation of that relies on other market support. So I guess these last 2, they're shorter term influences as far as key areas, so therefore the other markets are involved, whereas strategy 1, no other market involved most of the time, unless it's blaringly obvious that the other markets are doing something else, but just basing on key areas. But these key areas are brought into market over days or even weeks, so there's not a lot else to do but just apply the strategy over the top of the key area. So here we are. So we're finally breaking away from this support area that the market really hung around for about 4 days. But even within this area, it was quite most times it was quite evident what's going on when we look at medium-term markets. But at the moment, certainly pushing up and heading for higher levels, and got some momentum on the upside. Don't ever just like to leave it at that. The daily chart, always bring in my 15-minute chart and have a look at what's going on there. There was something really significant about today, and that's this is the pre-market leading up here, and all of a sudden we're pushing up and breaking through. First of all, this first resistance area, identified that as something that will give the buy momentum. Then more importantly, this point over here, it's a fairly high point for like the last few days. That markets I thought was in these pre-market sections previously, forming these holding patterns and thinking that they were going to go up and have a go at that. In the end, they kept on coming, falling back from there, and the sellers kept on coming back and gaining control. But this is a real statement by the buyers, and they've broken 2 of these levels in quick concession and push up high, and it's come back and immediately tested that level and bounced off it. So I certainly believe the buyers were around. And then a very interesting point really came into effect too, and this is quite a key level on the markets now. But really look for the markets to potentially come back and use this as a bounce area, because now that the buyers pushed through that so significantly in the pre-market, knew that some stage they're going to come back and test it and likely get support off it. So here we go. So 3 trades today, all up. There was 8 areas they looked at. With the 8 areas, doesn't necessarily mean they'll trade. Like, there's a few areas that I call potential setups, but at the end of the day, they'll void because it just didn't, the area representing. But my foundation or the definition of what I need within those areas, so the step-by-step process just wasn't completely met, so therefore it's easy to let the trade go by in certain areas. So the first one here is the directional breakout of the day, always looking for a direction, bounce off a significant area, and then a continuation of the trade. You know, it might be on the upside or the downside. So the thing about today, even though we're in a buyer's market, be wary of the bounce, or sorry, the pullback, because they're going to try to correct themselves a little bit and very likely come back, like I said, and test that significant area in the market now, which was around the 48.50 area. But did get a bounce. So right here is the exact entry point off the already predetermined area. The 1 minute chart shows it really quite well. Where is it? Here. So bounced off it perfectly and went 10 ticks exactly before coming back. So overall great area, but you know, with this breakout trades, really need the other markets, and Russell is a prime example. Here it is. As I'm looking to take the trade, look at the Russell breaking down like you wouldn't believe, and that's just confirmation not to take it, even though it potentially would have worked and might even been a break even. Not sure, wasn't taking it because it just didn't have the full everything ticked as far as that trade was concerned, so that one went on by. This area here, again, looking for a potential as it pops down and looks to go up and apply pressure to these highs, looking for a breakout trade. This was the identified level here, 54.50 is quite significant. So as it came down here, this is where it normally would have taken it, got that thrust. As it come back, would have been entering right here and looking in to buy, and it would have went six ticks before coming back down. But again, Russell totally not there, nowhere near its highs, and again need other market support. And for me, other market support is all the markets within the overall area, and at least one of the markets looking to really break. So again, one that definitely had to be left alone based on the other market rule with that breakout trade. From there, everything was applying some pressure to the downside. So, you know, reversal trade here, and what a reversal is based on is, first of all, need a predetermining area, or preceding area, I should say. Preceding area fails. So obviously 5 minute buy area here failed to go higher, so that's the preceding area failing. It might be a momentum, it might be a continuing area, or it might be a breakout area. One of those three areas fail, and then look for it to come back and with pressure be breaking a pivot. So this is a pivot area in the market, and all the other markets pushing through with it. So 1 minute chart shows it better. Here's that pivot area. It really came down quite strong. Occasionally get in earlier. This is certainly one to get in earlier on, but in the end I didn't. But the opportunity was certainly there to take it on early. And interesting thing about this, as it's breaking, there's the Russell. The Russell's already well and truly through its equivalent pivot area. So that's the sort of thing we want to see, is applying the pressure on a pivot area after a preceding area fails, and the other market really providing that sort of support as well. So there's a reversal and a push down quite nicely there. So now we're coming down, approaching this 48.50 region, just a real key area. Just of course you got to let the market tell what it wants to do, but just really believe the market was going to bounce and go higher from here, and certainly it was showing signs of that. The market was coming down and failing to push lower with any significance, but really bouncing up and coming back and almost making higher highs within this short region here, and then sort of the rounded bottom areas started to become complete as we started stepping up, making higher lows around here. Preceding that, or before that, there is a little arrow here pointing to a potential breakout trade. So again, you've got to look at the area as it is. So here it is here. This is the key price level. The market kept on dealing around this, and as it popped up here, sorry, it would have been around this area here, looking to take a sell, but of course, with this one here, the fact that a key level is 3-4 ticks below that, of course, you can't even consider that as an area unless it's below that, and then looking for some sort of sell up. The only time I avoid key levels is in regards to pivot areas. Pivot areas have precedence over key levels because it's an immediate pressure point in the market. But with the breakout trade, of course, if there's a key level that believe that it's going to hold the market up, or the market's got to show signs of pushing through it first, that trade entry need to come below that level. So even though there's immediate price action above that, and that there's an entry point for that breakout trade, the fact it's above a key level for me means no entry based on my system. Moving on, the market started then to really push up and get some sort of momentum on the upside. So this here is what I'd call equivalent of a 5 minute fade trade, or what I call a 5 minute momentum. So obviously new trend, market fades, so comes back, gets some sort of pullback, and then continuation of the trend. So this one here, what happened is the market's new, it's pushing up, there's a new trend, it's pushed past the area by 2 points. Look for it to come back, test this area, and buy. So very much, this is an exact blueprint of what I'm looking for. Only thing about this, there's a couple of things. If the key level is quite low and I'm looking to buy, that's reason to be careful. And also the other markets, the Russell was hanging around right near its low as well. So what happens, what I do here is switch to what I call needing a confirmation entry. So normally what I do is just look for it to push up, place my order there, and as soon as it tick, straight up, just as soon as it comes back to the price, get in and on it, and away it goes. This one here, what it needs is confirmation. So I actually wait, let it show that it wants to push up through, and then pop back off the level again, and then go. So basically, it needs to touch the level twice. And the only time we use confirmation entry is when there's a couple of stipulations, such as a level like this is really quite low. So there was momentum and everything was there, but the level being low, I need a confirmation area. So it bounced off quite well, or very nicely, confirming that this is a real key level in the market for future, but just no entry there based on the actual system rules. So market's pushed up higher. Again, this level up here, it's getting through the next level. So this is the next significant area in the market. So once it pushes through this area, look for it to come back. So 6 to 8 ticks. So I only need 6 ticks in this particular case because momentum was certainly with the markets. Look for it to bounce off that level and then go higher. So it touched and eventually it hasn't had this the ability to hold and push higher, and it's come back underneath it. Interesting area which I'm going to have a look at for potential future, and I don't ever like to change things too much. But in regards to this area, I mean, for now it goes down as a loss, but I'm always looking to react to price action as best as possible. And I know through just consulting with some other traders in regards to price action that you got key levels in the market, but what you want to really do is read price action around a key level, and not just necessarily rely on the level to be exact. Obviously, most times it's pretty close. I don't want to confuse the situation, but what happens is ignore this line for a second. This is to do with another trade, but here it is here. This is 53, this price here. So the markets come up. Where are we? Yeah, okay. Markets come up to this level here. It's come back pretty sharply and then created what we call a bit of a fractal or a level below at 1351.50, then pushed up higher through that level. Then it's come back, and what I'm doing is sitting here buying at this level here, and obviously ultimately that's where I've been stopped out. As I'm in the trade, but I'm sitting here watching and it's going sideways like this, it just became blaringly obvious that it was actually going to pop down and look to gain support off this level, and definitely it just seemed very probable that the buyers are going to come down, have a look at this level, and this is where they're all going to be lying to buy and then go higher from. So it's still around this key level, but just based on the immediate price action, just finding that the actual best place was to enter it down here. But anyway, it's something for myself to look at. For now, it definitely goes down as a loss. I just want to stick to my strategy. If I can find ways to refine it, definitely always looking at that. But sometimes that key level is quite obvious, and unless there's a significant area forming around it, I mean, always go with the key level. But this particular one, it just was just obvious that it's going to come down even within the trade while it's still at that break-even point. I just thought it was going to come down, but at the time I didn't want to mess around with it, but certainly look and consult afterwards. But anyway, overall momentum pushed up through the area, looking for the bounce, didn't get it there, pushed down, so ended up being a stop out there. So the market's dealing around this point here. I've got a 5-minute buy coming up here. So again, what looking for based on my interpretation of the 5-minute buy, I call it 5-minute continuation. Base around a key level, get through the key level, so like I did here, through this level, then pop back and buy off that key level, and know that should be an area where it's going to hold and go higher from it, and that's my way of approaching the area. So I let the predictive average show me the area. So this is obviously a 5-minute buying area. I need to base it around my key level and then look for my blueprint or my formation over the area. And again, it's using that theory before based on momentum trade, that there was actually based on this particular area, there was actually a bit of a level below that key level at again 1351 that should have been really looking at and dealing with, but again that's up for future interpretation for myself and something to look at and define. So but based on this particular area, it needed to push through, come back, just missed, getting an order there before pushing higher, so missed the continuation trade there. From here I'm still looking at the breakout trade. So this is the area here. So looking at it here, so the market, this is the pre-identified price as it comes back, pushes up through. So here's the thrust, waiting for it to come back, touch the level, and buy there. So bought at this particular area here. So on the 5-minute chart, where would it be? Sometimes it's hard to see on the 5-minute charts, but around this area here, it's popped up and started to. Sorry, probably entering. Sorry, I'm entering here. So again, I should explain that 1353 was the price action level there that I identified. Especially this area here and a few areas back here, just really became evident that when it pushed through, it was going to come back and test that level. Obviously there's a key level just below it, but just didn't think it was going to get back that far, and it just didn't quite get there. Different to the other level where previously I didn't take a 5-minute breakout previously on the sell side because there was a key level below the sell, meaning I'd be in the sell and all of a sudden there's going to be something causing the market to go back up. This is completely different. I'm getting in above it, and there's something below, within a few ticks below my entry, causing the market to go up. So that's exactly what I want to see. But I'm not going to wait for the key level in this particular case. So I need to wait. I want to get in on the immediate price action, which is 1350. So I popped down, got me in there, went 8 ticks. This is one of those trades where just I was prepared. I was actually looking for a 4 or 5 point play. What ended up going 3, 4. It did gather 5 points, but it went 8 ticks, stopped, hit the break even exactly, and then went. So be it. That's a break even trade. Unfortunately, got to stick to the rules. As soon as it goes 8 ticks, I'm not going to be mucking around and moving my stop. But it was one to go for more, and it was pre-identified as to going for more. And the reason behind that is just don't randomly pick trades to go for more. Most of the time I'm always going for 10 ticks. But this particular one, based on those 15-minute charts, so we said they'd come back, got support off here, and I just identify this as an area is if we get any sort of buying trade, and I was thinking the same thing with any of these momentum trades, just prepared to hold on and look for it to go up and break these highs. And the reason I was looking for 5 points in this area is because 1360 was a pre-identified region as it could potentially go next to. So you always come back, but you don't look for it to go exactly that point, but look for 4 or 5 points to take me up to that region that was pre-identified as a key level. So that's it. One winner, one loser, one break even. Quite a bit of information, a few things to look at, but certainly feeling good and feeling confident with the system.